Good afternoon. It is January 2nd, Monday at around 11:30 a.m. Eastern Time. Just want to wish everybody a happy new year, and I just want to kind of kick off. I know the markets are closed today, but I kind of want to recap my outlook and kind of what's unfolded in the past couple months in the market and what I feel is kind of going to unfold looking forward. So looking at the long-term chart here, this is the weekly dollar index. So you can see up here it is the US dollar index. And this little symbol up here, the W, stands for weekly. Now what I would just want to point out here is we've got some pretty long-term trends here. US dollar has been channeling in a multi-year channel moving down, and if we look at the shorter term time frame here, we've got more or less a bit of a downward channel here. And the US dollar index this is the weekly chart again. I'll zoom in a minute to show you more, but overall it looks as though the US dollar index is on its way up to the 86, 87 level, which if we see an extended move up to that level, we're going to continue to see selling pressure in stocks and commodities. If we do break out of this pattern in the next month or two, and we see the US dollar start to break out, we might see a little bit of a pause here, but there is huge potential for a multi-year rally. We could see a big move in the US dollar index to the upside, and that could put us into a bear market, which is what the monthly charts look like for the indexes. They look like they're at the point where they could roll over and sell off for a full-fledged bear market that would last a year to year and a half. So that's a pretty long-term negative outlook, but that's kind of where we stand. And if we just zoom in here a little bit more, you can see we're just riding this trend line up in the US dollar index, and overall I feel as though the market is somewhere trading the US dollar is something similar to this right now, these levels, where we could get a very sharp move to the upside with what's happening overseas across the pond there. We could see the US dollar index really shoot up and head up into this resistance level right across here. And again, if we get this nice pop in the US dollar index, it's going to put a lot of pressure on stocks, commodities, precious metals should sell off, crude oil, all those things. So that's what we got to keep our eye on right now. And right now we've seen the US dollar index break above this previous high right across here. If you just draw a little line across there, we've seen it break above. It's been consolidating, and it just started to move up a little bit on Friday, and we're right at the support trend line where we could see it take a nice shot to the upside. Again, if it breaks above this previous high, it still has these highs over here to contend with, but overall the simple measured move shows that we should get up here to around the 82 level on the next thrust higher, and then we'll kind of go from there. But we could see it really pick up speed here and head drastically higher. So taking a look at commodities, here's the crude oil chart. This is the 4-hour chart. It allows you to zoom back several months. It's similar to the dollar chart, or sorry, the daily chart, except for you get to see some intraday price action. You actually get to see patterns as opposed to just big candles on the daily chart. So you get the long-term view of the daily, but you get the benefit of intraday price action and volume analysis. So what I'm looking at here is simply the US dollar is more or less trading up at resistance. It's looking as though it's ready to continue another move down, and we could see it break these lows and head down to the 92, 91 area, and that's kind of where we are. We shorted crude oil up here, and it looks as though it's ready to move down to this level, which would just be more or less a falling channel support level here. And of course, usually you'll see the market break a previous low, and that's what the market does. It'll break it, run the stops, and that's where we'd be looking to really cash out for the majority of the play, because once it runs the stops and has that initial panic sell-off where all the stops trigger, volume will pick up, and that's when you usually see the market bounce. It could bounce all the way back up, could bounce a little bit and continue lower, but that's where our main target is. Looking at gold and silver, the trend for gold and silver are still down, and the odds in it when there's a downtrend, the odds are it's going to continue in that trend. And until you're proven wrong, you really don't want to be, in my opinion, buying in a downtrend. You want to be shorting rallies. So overall, you can just see the overall trend is down. Short-term trend is still sharply down, and we're starting to get this price action where it's starting to get closer to a bottom by the looks of it. You're starting to get these bounces with these lows. They usually pick up speed, and then usually you'll see some sharp drop, and I've got a target for 1450, 1440 on gold. So there's still quite a bit of potential, another $100 down on gold, where it could put in a bottom and then actually put in a pretty sharp move back up to the 1640 area, or depending where this upper trend line is down the road. Looking at silver, here is the 4-hour silver chart. You can see here it's clearly in a downtrend. It's also started to form these bounces of selling, and it could usually see the biggest move happen right near the end, and that's when you see capitulation selling and panic in the market. Usually that's when you'll start to see a bounce back up, and it'll work its way higher for a little while. So overall, the trend is still down for gold and silver, and they're both trading actually at a short-term resistance level, which are these previous more or less breakdown points. They broke down, they come up for that kiss goodbye, and then they could roll over and head sharply lower. And again, if we see a big move down below the 26 level for silver, I think we're going to see some margin calls kick in. We'll probably see something similar, maybe not as drastic as these two last declines, but we could see something very sharp, maybe half that size down. And I do have potential for a $21 silver if we see a big drop, if we see the margin calls start to come in and we see momentum pick up here. So you got to be very cautious with silver. It's in a downtrend. You don't want to be buying it until it shows that it's actually working its way higher in an uptrend. Looking at the SP 500, this is the daily chart here. This is the SPY ETF, so regular trading hours. And what I just want to show here is simply more or less we've had a continued sell-off. We've had a nice bounce going into Christmas, but overall it's kind of tough to see. I'll show you on an intraday chart, but overall we've had a strong thrust down here with some rising volume. Considering the holiday, there was a good volume spike for the sell-off, and it's formed this little mini kind of pennant here. It looks as though it's ready to break down and head lower. Now overall for this pattern, we could see the downward target around the 2250, depending how quickly it drops, would be a major level. If it breaks below this support trend line, then we'll probably see it start to break down even lower. And again, then we've got this major pivot low here, that if it breaks below this pivot low, we're going to see it come down. We might see a pause or a little doji candle here, and then see it come down. If it breaks this level, we're probably going to see it come right back down to these lows. So there's a really good potential downside in the market, and protective stops on this play is not too high up from where we shorted it right up here. So overall, it looks like we're setting up for a nice move to the downside, and if we do get that big US dollar index rally, this will just be the start of a major sell-off. Now if I go to the weekly chart, you'll be able to see, let me just pull up a different chart here of the SPY and pull up the weekly. Here's the weekly chart, and just looking at the long-term patterns, it feels as though we're somewhere right about here, something right about there, and you can see what happens after that. And both times you see the US dollar rally and you see the equities market just fall off a cliff. Now overall in this pattern, it looks as though we're getting a head and shoulders. We had some pretty strong move to the downside. We've got a bit of a neckline across here. If we see it start to break down, we're going to see we could see a double dip technically in the market in 2012, or it could drag right over to 2013. The market has a way of dragging things out. It could take a while to move down, but that's kind of where we stand. We got to be very cautious. Now on the positive side of things, this chart, we have had a nice move up, and it is consolidating in a little bit of a pattern like this, a little bull flag. So there is potential that we could see it actually continue to move up quite a bit going forward. So we're at a major tipping point here, but right now it looks to me as though we could be going into, we could have a bloodbath in the market for 2012, which is good as long as you're on the right side and we're playing the downtrend. There's huge potential. We can make a lot more money in a shorting a market simply because it drops about 3 to 4 times faster than a market rallies. So that's kind of where we stand long term for 2012. It could be either a grind higher and something similar like what we saw back here in 2010 where there just really aren't any pullbacks. It's just a slow grind higher and higher and higher. You play that trend, or if we get a breakdown, you have to actively kind of trade a bear market. You have to be a little more aggressive and manage your positions more. But there could be great potential to the downside too. So looking forward, we're at a tipping point, and we're just waiting for the market to break out into a range, or sorry, not into a range, into a trend. Now, just overall to kind of show you where we stand, this is similar price action to where we are right now. We're trading in this pattern, and again, we could see it continue to extend up, or we could see it break down violently and really start to head quite a bit lower. And that's kind of where we stand right now. You can see the last trend was up, but overall, zooming in here again, looks as though we're getting a head and shoulders topping pattern with the neckline, and that's kind of where we stand long term right now, are these two directions, and we're just waiting for a breakout and some setup. Now, looking at the 10-minute chart of the SPY, just to get a feel for where we stand for this coming week. If I was to just zoom out a little bit here, you can see the recent bounce in the market, and then we had a sell-off. We've had another bounce in the market. Now, we did go into holiday season, so volume was very light, which is why the market generally drifts up on light volume. And we got a nice downdraft with some good selling, and the market's bounced back up on light volume, and we saw some distribution selling kick back in on Friday. And we are up in a resistance zone here, so I wouldn't be surprised. We ended up taking a small short position here. We've got a very tight stop on it. It's about 1.5% or so. So if it goes up, we will just simply exit the trade. Might actually flip to the long side depending on how it moves. But overall, it looks to me as though we could see the market start to pull back to this 2250 area, which is a support trend line. And again, if it breaks that, the next level of support will be around the 120. And if it breaks that, it will start to really become bearish on the long-term charts, and investors will start unloading stocks, and that could be the trigger of a major bear market starting. Anyways, just taking a look at the futures chart. Actually, futures closed pretty much right after the market on Friday, so there actually isn't any pre-market today. The markets are closed, so that's about it for now, and I'll talk to you in a bit. Bye-bye.